All right, bull runners, hope you guys are having an amazing day, amazing evening. God bless you all. Enjoying a nice cigar here, enjoying the view out in Miami, Florida. And I have some big news to talk about in the crypto space. Some exciting developments taking place that are unfolding as GateHub and XRP Ledger Labs, two industry titans, are announcing a strategic partnership to introduce a seamless on and off ramp solution for various assets with the goal of enhancing interoperability and essentially boosting the adoption of XRP in this rapidly growing, space, specifically with decentralized finance. So comment 777 if you guys are feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, confirm it by liking this video, subscribing to the channel, and as always, let's run it. All right, bull runners, I hope you guys are having a great evening. So I have a lot of information to share with you in this video. So buckle up, get ready. This is going to be a powerful one. And the main reason why this news that I'm going to drop is a big deal is because the crypto space has well over 1,000 blockchain platforms, layer ones, layer twos, and nearly 2 million cryptocurrencies, each with their own unique set of utility, functionalities, and problems that they're striving to solve. And they don't communicate well with each other. So, a game of telephone, right? If you were in the 2021 bull run, you were, around for the 2017 bull run. I got into crypto in 2016, and it was crazy. It was madness because everyone was wondering how do you transition and how do you bridge between the Binance Smart Chain, the Ethereum blockchain, Polygon, Matic, you have XRP, you have Cardano, you have all these different cryptocurrencies, and they were using like wormholes, they were using, cross bridges, and they were doing all this research on how to be able to buy crypto, how to invest into crypto. And so it was the most popular thing on the planet at that time. So even though there's, a lot of different projects, a lot of different cryptocurrencies, the vast majority of these projects will go away. Just like what happened in the dot-com bubble. A lot of these companies went away. And then the big companies, the big tech companies, they absorb the vast majority of the market share. Companies like Apple. And so Ripple, I believe, which I could be wrong here. If you agree, like this video. If you disagree, drop a comment below. Let me know why. But I believe that Ripple will be like the Apple of the early internet era, but much bigger. So what I want to do in this video is I want to explain, and I want to give you guys a comparison between Ripple and other products and XRP to help you understand, because Ripple is the company. A lot of people say they're buying Ripple, but they're talking about XRP. Those are two different things, okay? Ripple's the company. So think of Ripple like Apple. Just like Apple develops products like the iPhone, the MacBook Pro, desktops, the Apple iWatch, the iPad, Ripple creates financial technology. So fintech is what it's called for short. They create fintech solutions like RippleNet, which is a global network of financial institutions and service providers and banks, that get together and use Ripple's technology, such as Santander, one of the world's largest banks, American Express, Standard Chartered, SBI Holdings, PNC Bank, MoneyGram, tons of others. I could go on and on and on. The list of central banks, commercial banks, retail banks, the list is never ending. Their partnerships keep stacking up massively. So these banks are joining RippleNet in the droves through partnership agreements to use Ripple's products. So one of Ripple's products is called xcurrent. So I want to talk about this so you can understand the difference between XRP and Ripple and how XRP is going to facilitate, on-demand liquidity for cross-border payments. So xcurrent is a software solution developed by Ripple to allow banks to do instant settlements of their transfers. And I'm going to explain why this is important, because this addresses the challenges associated with cross-border payments that you don't see because you're just an everyday retail investor that's, maybe you got $500,000 in a bank account. That's not a smart play because of the FDIC insurance up to $250K. So the smarter move is to have 5-10 different bank accounts up to $250K in each of the bank accounts before the next bank run that takes place. But here's the issue, okay? Here's the problem associated with cross-border payments. Slow processing times, high costs, limited transparency, among other things that if you don't own a bank, you wouldn't understand, right? But these banks deal with it. So get out of your own problems here. Start thinking of bigger problems with me right now and how these problems are going to be solved in this space. And I know if you're thinking to yourself, it's hard to take someone seriously that's wearing a bucket hat and smoking a cigar and drinking some drinks on a on a balcony out here overlooking one of the most beautiful views you've ever seen in your life out here in Miami, Florida. I understand why you're skeptical. That's fine. But unlike some of other Ripple's products, such as xrapid, which is on-demand liquidity, xcurrent does not use XRP. And so I want to talk about the opposing force here. And the opposing force, as a bridge currency for liquidity, instead, xcurrent that critics are arguing about focuses on enabling efficient fiat to fiat currency transfers or CBDC to CBDC transfers without XRP. So let's discuss this for a second, because CBDCs aren't competition for Ripple, because Ripple is helping these banks. They're helping these central banks create their CBDCs. And so xcurrent is using what's called the ISO 222 messaging standard for communication between financial institutions for the CBDC initiative that's going to be implemented before 2030. So let me explain this so you understand this, okay? So in traditional cross-border payments, traditional finance, banks and financial institutions, what they do is they maintain accounts with foreign banks to ensure that they have the necessary liquidity in various fiat currencies. So when US banks, what they do is they have what's called nostro accounts with their correspondent banks in foreign countries. And these nostro accounts are denominated in the local currency of those countries. And conversely, the foreign bank maintains what's called vostro accounts with the US bank in US dollars. So when a US bank like JP Morgan Chase or Wells Fargo needs to make a cross-border payment, let's say US dollars to the euro. If you're going to send money from JP Morgan Chase over to Europe, you're going to invest into crates, barrels of wine, you're starting your own vineyard, or you're just buying a bunch of wine, you're stockpiling, getting ready for the recession, you're buying a bunch of cigars, you're buying a bunch of liquor, you're buying a bunch of wine, and you're preparing. You're doomsday prepper, okay? So you're going to pay with US dollars to euro, and using the funds in the nostro account in the relevant foreign currency to settle the transactions is what the banks do. Now, similarly, when they receive funds, from a foreign bank, those funds are deposited into the vostro account maintained by the US bank in US dollars. So transactions are settled through the nostro and vostro accounts, and the corresponding entities or entries, in this case, are made in the books of both banks through their internal ledgers. Now, their internal ledgers is different than the ledgers on the blockchain, which is what all these companies, all these banks are shifting to through distributed ledger technology that you've seen about in The Simpsons, that you're hearing about on the news. And so the problem with this is there are tons of fees for currency conversions through nostro and vostro accounts. There's transaction fees, there's intermediary bank fees, there's foreign exchange spreads in the billions of dollars that rack up for these large banks. So if banks can use xcurrent without the need for XRP through their nostro and vostro accounts, why does it make any sense to hold any XRP if banks don't need it for the service, right? Why did Ripple create the service, and why is XRP, what's the point of XRP in the first place? So this is a good question, and this is a big argument that XRP critics are mentioning. Now, I like XRP, but I personally, if they're around long term or not, I don't care. What I care about is which projects are going to be the main movers and shakers and liquidity generators and make you wealthy. That's what I care about. Getting you wealthy so you can become the first millionaire in your family tree. And obviously I'll get wealthier too. You'll get wealthier too. We all win together. It's a win-win scenario here. So here's how this works. Due to all the fees that the banks have to pay, what Ripple did is they created xrapid. So different than xcurrent, it's called xrapid. It's rebranded as on-demand liquidity, which allows payment providers and banks to convert one currency into XRP. It transfers XRP across borders and then converts it into the destination currency, or the euro in this case, nearly instantaneously without them having to worry about price volatility. And so Bitcoin, when you think about Bitcoin is too slow to do this. It's too slow. Bitcoin is considered a digital asset. It should not be called a cryptocurrency or digital currency. It should not be used as a currency. It's an asset as a store of value like digital gold, whereas XRP is that currency because the transaction per second, TPS, transactions per second, XRP is much faster and it's much cheaper than Bitcoin. So what this approach is doing is it's minimizing the need for pre-funded nostro and vostro accounts, and it reduces the bank's liquidity costs. and various fees, since the fees to use XRP are virtually nothing. It doesn't cost you anything if you've sent XRP before, which I know you have. If you're watching this channel, you're subscribed to the channel, and the liquidity would be held in XRP. So banks would actually have an incentive to hold XRP using xrapid. So think of it like if you're using an iPhone to, play a game in the App Store. So instead of having to input your credit card, every time you want to purchase upgrades in the game that you're playing on the App Store, what you would simply do is you would double click on the side of your phone and you would use Apple Pay, and it's instantaneously. Now, another example would be, SunPass out here in Florida that I can think of. So when I drive on any of the major freeways, if I take my Audi R8 or a Ford Bronco and I go down the freeway, I want to go on a road trip, and I drive through all these tolls, I'm going to get charged a bunch of fees for that. So if I don't have any money in my SunPass account, I have to pay with my credit card, which charges fees to these companies. So if I'm using like American Express, Wells Fargo credit card, Chase credit card, Citibank, any of the other banks that I bank with, then what would happen is I got to pay fees for that, or the bank's got to pay the fees. And so in this case, it would pre-fund and I would load up the SunPass account so it can withdraw at any time I drive through a toll, and I don't have to manually log in or do a wire transfer or an ACH or call them and have to sit on the phone, deal with customer support to make those payments. Now, this is obviously not exactly how, xrapid works, but it's an example to simplify it, because the SunPass account in this example would be like exchanges that have deep pools of XRP liquidity, and they're holding XRP liquidity to facilitate large-scale transactions, so these banks, wouldn't have to use Nostro or Vostro accounts to pay those insane fees that they have to do like USD to the euro, USD to the Australian dollar, or any other fiat currency. So Ripple is the company like Apple. Xcurrent is like Apple's iOS operating system, and xrapid, or on-demand liquidity, is Ripple's Apple Pay function for easier payments with XRP. And they primarily use XRP. Now imagine this, all right? Imagine this for a second with me. Imagine the XRP ledger as the internet protocol, which would form the basis for a wide range of online services and applications to connect all operating systems, rather than just one company, one desktop, or one mobile operating system for one platform. XRP Ledger is the blockchain network, like the operating system for all digital transactions. Fiat to fiat, fiat to crypto, crypto to crypto, CBDC to CBDC. So lastly, XRP is the digital asset used on the XRP Ledger, and also with xrapid and within the XRP Ledger network for various purposes. So the collaboration between GitHub that I mentioned at the beginning of this video and XRP Ledger Labs, it could serve as a bridge for crypto, facilitating smoother interactions in the decentralized finance space. But XRP has a much bigger purpose than just that. That's some good news, but it could be used for multi-trillion-dollar derivatives market. So when you see how big the derivatives market is, of total debt out there, on top of that, small and medium-sized enterprises and businesses and banks, it's absolutely insane that the market cap is still below $30 trillion for XRP at the time of making, not 30 trillion, sorry, $30 billion. $30 trillion could be in the works here soon. No guarantees, not financial advice, but in the context of cryptocurrencies and blockchain, when you hear terminology like on or off ramp, or distributed ledger technology, or interoperability, let's talk about specifically on or off ramp, okay? It's referring to the ability for people to easily convert between traditional fiat currencies like the US dollar, the euro, other currencies, and digital assets, cryptocurrencies, stablecoins, or even CBDCs. It acts as a bridge that allows users to enter and exit the cryptocurrency ecosystem seamlessly. So here's how it works. Okay, on-ramp. This is a process of converting fiat currency into cryptocurrencies, and it's how users, quote-unquote, get on the ramp, or they invest into a cryptocurrency. For example, you might use an on-ramp service to buy Bitcoin or XRP with US dollars through like JP Morgan Chase. If you bank with Chase or you bank with Wells Fargo, you would send money from JP Morgan Chase, you would create an account for Coinbase, and you would send it to your Coinbase account or your Binance account or any other centralized exchange. And the term centralized simply means there's a central authority that owns and operates these exchanges. So if you think of Coinbase Inc. is the central authority that owns Coinbase, and Binance Holdings Limited owns and operates Binance, and BAM Trading Services Inc. owns and operates Binance.us, which is a separate entity to, service the US customers due to regulation. So I'm not going to get into, all of that and bore you guys half to death. Okay, I don't want to bore you half to death. I want you to be educated and then entertain you as well too, because I know some of this stuff might maybe be dry information here. That's why I encourage you to pour up a drink with me real quick, because we're getting saucy right now, all right? So, to get saucy in these markets, I don't want to get into all the details, but the reason why Binance has Binance.us is for 5 reasons, okay? Number 1, AML KYC regulations. Know your customer regulations, state level licensing, compliance with the SEC, FinCEN registration, financial crimes and enforcement network, and tax reporting laws in the United States of America. America is pretty much doomed for crypto. They sold out a long time ago. We are in the Roman Empire now. It's on the decline. It could be compared to Babylon. All right. The SEC said that Binance broke U.S. laws by operating as an unregistered securities exchange, and it filed similar charges against Coinbase at the same time, right before the Ripple lawsuit verdict came out. Very interesting, huh? Right before it came out. So they knew that they were most likely going to lose, so that was their backup plan. Because the SEC is off the rails on the crazy train with Gary Gensler helming the ship of the clown show there. So when we talk about getting off ramp here, okay, getting off the crazy train or getting off ramp, conversely, the off ramp is the process of converting cryptocurrencies back into the crazy fiat currency system, where you're going to convert it back into the dollar that's dying, and then you're going to move the dollar into precious metals or into real estate or something like that. So it's how investors get off the blockchain networks that they're investing in and return to traditional money. So for instance, you might use an off-ramp service like Coinbase. Maybe you're using decentralized finance like MetaMask, or another exchange that you want to trade different altcoins, and then you transfer it into your Coinbase, and you sell into Bitcoin, or you sell into USD, and you receive the US dollar in return for what you're selling. So the significance of a seamless on and off ramp solution that Ripple introduced by the partnership between GateHub and XRP Ledger Labs lies in its ability to make it easier for people to enter and exit the cryptocurrency space, because it's a pain in the ass to bridge between blockchains. You talk about Binance Smart Chain and the Ethereum blockchain. That alone, it's like trying to put together a puzzle with your feet. So in the case of XRP, the seamless on and off-ramp solution is going to play a massive role in the decentralized finance space. Now, XRP can become a bridge asset, allowing users to access the benefits of DeFi without friction, but it has much bigger purposes like I talked about. So when you have a massive amount of banks, you have a massive amount of institutions, massive amounts of hedge funds, massive amounts of market makers and traders using XRP for on-demand liquidity, it limits the supply available. Even with Ripple releasing XRP from their escrow, still the demand is going to outpace the supply. And when you got a smaller supply of tokens to use for the on-demand liquidity and a higher amount of transactions to use those tokens, the price of XRP will be drastically affected. Now you combine that with the US national debt jumping by nearly $1 trillion per month since the debt ceiling crisis came to an end in June, projecting the gross debt to rise to over $50 trillion by 2033. We're at $33 trillion. Another $20 trillion is going to flow in over the next 10 years or less. It's creating the perfect storm and the perfect tidal wave for the next crypto bull run. So, to put this into perspective, it took the US about 232 years to add the first $10 trillion in debt. 232 years. Now, the craziest part is the debt ceiling is effectively uncapped until 2025 in the latest debt ceiling agreement, meaning they can go up as much as they possibly want. The Treasury and the Fed can do whatever they want. They can ramp that up to 35, 40 trillion over the next couple of years if they want, meaning deficit spending has no limits until 2025. So they're going to rack up an insane amount of debt the next couple of years that you need to be ready for it. Now, the real key here, and when there's more debt, guess what happens? Okay, the value of the dollar goes down, and assets like crypto, precious metals, and real estate go up. Now, this isn't financial advice. I'm not telling you to buy XRP. I'm not telling you to back up the truck for gold, silver, precious metals, real estate. But what I encourage you to do is to do your own research as always, subscribe to the channel, watch the other videos we've been coming out with to educate you about the financial markets so you can stay in the know to become financially free, because we give you the best to help you prepare for the worst that's yet to come in this economy. So as always, like this video, subscribe to the channel. If you're backing up the truck all the way to the bank, you're grabbing the bags, packing them, stacking them, leaving no bags left behind, because we believe the spending power of the dollar continues to go down in value. That's the truth, based on inflation. Blockchain technology, distributed ledger technology, on-demand liquidity is going up in interest. That's a fact. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com, where you'll learn our #1 way to earn passive income online with crypto. What I'm working on right now to build this community, guys. I would love to have you a part of it, so that way we can learn and earn together. And as always, I will see you on the next video. I'll see you on bullrunners.com. You know what to do. God bless. Stay bullish.